Welcome to the Me the Money Show. I'm Dan Barnes, Editorial Director for Markets Media Europe, and joining me today is Lynn Strongen-Dodds, the editor of Best Execution magazine. Lynn, welcome to the show.
Thank you.
So we're going to talk about some of the stories that we've had on Best Execution this week. Saw that Northern Trust had put out a white paper. Could you talk us through what they'd seen and what the results of their research were?
Right. Well, although COVID has exacerbated a difficult situation, asset managers were already dealing with margin pressures, regulatory compliance, and geographical expansion.
Yep.
Now, these concerns were encapsulated by the Northern Trust White Paper, which has a very long name, Driving Growth in Asset Management Solutions for the Whole Office in 2020 and Beyond. And this was undertaken on behalf of WBR Insights.
Okay.
And they surveyed 300 global asset management firms, and they found, not surprisingly, that they're struggling to balance growth strategies with escalating costs and fee pressures. Around 87% said that their strategic objective for the next 2 years will be controlling costs. Again, no surprise, while nearly as many also expect to focus on risk, compliance, and resiliency. Also, about half are planning to enter new markets for driving distribution growth. Continental Europe tops the chart for the greatest opportunities, closely followed by the US, and the UK is somewhere farther down the line. And in terms of products, the majority of those canvassed said their investors preferred a regulated fund structure and domicile. In general, about 2/3 of those polled plan to leverage new technologies to achieve their overall aims, such as AI, while around half expect to change product strategy, and around 41% expect to see M&A activity. And again, not surprisingly, outsourcing is on the agenda, but even for those functions that the buy side has been, historically reluctant. So for example, and it's quite a big high number, 85% of respondents have either already outsourced their trading desk or are interested in doing so over the next 2 years. And about half are considering this for data management over the same time period. And about 1/3 are thinking of doing it with foreign exchange and middle office functions. And the study believes overall that the most successful asset managers will be those that are going to rethink their operating models from the perspective of their whole office and to take a much more holistic view. Obviously, outsourcing is going to be part of that. And if they do go that route, though, they should find partners, whether it be an order management system, foreign exchange provider, trading solution, that really fits and it can be integrated with the business. Because ultimately, the decisions that are going to help drive alpha will have to be focused on optionality and interoperability.
Very good, thank you. That's a very high percentage, say 41% who are thinking about M&A activity.
Yeah. Which, consolidation has been happening in the asset management industry. And I think that this current environment is going to accelerate the trend.
Absolutely. Well, ever since the Barclays Global Investors BlackRock merger, which obviously created the giant that BlackRock is today, Aberdeen Standard that we've seen more recently, the OFC. Okay, that's really interesting. Then I noticed that the European Commission has had its high-level forum recently. So presumably that's putting out some consultational recommendations on what's happening in the Capital Markets Union in Europe. Is that right?
Yeah, so as you know, the Capital Markets Union, or CMU, has been a very long-running project for the European Commission, but it has continually been sidelined. So it started 5 years ago, but the economic fallout of COVID has really put a light under the Commission, and their so-called, as you say, high-level forum, or HLF, published 17 recommendations this week to finally get the ball rolling. And their aim, as before, is to get the industry to adopt rapid and bold measures. But the interesting thing was a report from Moody's Investor Services came out, and they said that the CMU could especially be beneficial to European asset managers who are lagging behind their US counterparts. And their research points out that although the Europe and US have similar-sized economies, the latter has much broader, deeper, and much more liquid markets. Mm-hmm. And for example, the compound annual growth rate of assets under management for US asset managers was 5.1% in the 10 years between 2009 and 2019. And that's compared to 3.9% for their European peers. And so what this has meant is it's held back European asset managers' investment to new products and technology, but it has also hindered their profitability. Now,
Yeah.
there is no guarantee that these recommendations will be implemented in their current form. But
Well, there's 17 of them. I mean, surely
they're
that's not too
17,
many.
yeah, they're 17. And speaking to some people, they hope, but there's no guarantee. And we've been down this road before. However, the ones that would particularly help boost the fortunes of the asset management community include
Mm.
overhaul existing EU financial regulations such as MiFID, and we're seeing a review anyway of MiFID and EMIR. MiFID's been criticized for its unintended consequences. So, for example, small to medium-sized companies are not getting the research coverage that they have in the past, and managers are upset about that. The HLF also advocates increased cross-border investments, greater pension reforms, improved advisory services and products, and better financial education for private investors. In general, overall, the HLF believes that the financial service industry would benefit greatly from a consolidated tape. Again, this has been a long-running source of contention and debate, and their recommendations are, although they're not, commenting on the feasibility of the design, they think the tape should be comprehensive coverage, improved quality, and standardization in order to really aggregate data in a meaningful way.
One of the big problems, surely, that Europe has is that whereas the debt and the equities you can get in the US market are for companies that can straddle the whole market, in Europe, there are no champions for the whole market. They're all for individual countries. And whenever there's any proposed merger, this is seen as anti-competitive to the rest of European markets, and it's shot down. So,
and even MiFID II hasn't been implemented across Europe. The southern countries are still going for MiFID I. So it's a slow go. It'll be interesting to see if these recommendations are implemented, if CMU is actually, after 5 years, going to finally get off the ground.
Yeah. I was going to say that in the LSE Deutsche Börse merger was always shot down, but we have actually seen this week one big merger actually complete within Europe, obviously not entirely within the European Union, and that's SIX and BME, isn't it?
Yeah, so that merger was finally completed this week again. It's SIX Group acquired Spanish Stock Exchange BME for 2.8 billion euros, and this has catapulted the exchange to Europe's third largest and the 10th largest globally by revenues. SIX said the acquisition would allow it to further expand its business in the European Union. The combined group also plans to create these innovation hubs in Spain, and also the hope is to attract new pools of capital in the Spanish market. But it also offers the chance to build a derivatives business and a hub within the region. The acquisition, as you point out, has been going on a long time. Consolidation in the industry. It's one of Europe's last standalone stock exchanges, and it has come at a time when the industry is under pressure from lower fees and declining revenues. And although market volatility, as we all know, triggered by COVID in the first quarter, saw trading volume spike to record levels, many people think this was just a temporary reprieve. And point out, there's London Stock Exchange and Deutsche Börse for the last 15 years have been going back and forth, but exchanges have been looking to gain scale and diversification from their core businesses. And last year alone, we saw Euronext, which also was thinking of making an offer for BME but didn't. They bought Oslo Børs, and the London Stock Exchange bought, as you know, the data and terminals group Refinitiv for $27 billion in its attempt to turn itself into a global markets and information powerhouse to, they say, rival Bloomberg.
Yeah. Well, of course, what's interesting about that deal is it hasn't completed entirely yet.
No,
and
you're right.
There is some discussion within the European Union about whether or not MTS might try to be folded out of the LSE group, which that's an interesting situation because as we've had SIX, which of course being the Swiss exchange isn't in European Union, buying European Union exchange, the idea that the LSE would need to divest itself of MTS because it was leaving the European Union via Brexit doesn't seem to be as strong. And of course Oslo not being in European Union either.
Yeah, exactly. It'll be interesting to see how these on. So maybe next time I'll be talking about the LSC Refinitiv deal and what they will allow them to keep and not keep.
Yeah, that's right. Can we please have our shirts?
Yeah, exactly. Exactly.
Okay, Lynn, that's been fantastic. Thank you very much.
Thank you very much.